Welcome back. It's time for Overlooked Stocks with George Sillis, our senior markets correspondent, of course, here at Charles Schwab. Now, George, I'm taking a look at Applied Digital right now, closing up 48.5% on the day after reaching that data center deal with Coreweave. Walk us through this story.
Well, it's actually, for Applied Digital, it's actually a pretty big deal considering this company's technology and also partnerships now with major players in the crypto mining space. For instance, they do have partnerships with Marathon Digital, and today's deal with CoreWeave, which, as we know, is NVIDIA backed, essentially artificial intelligence as a service. In other words, they rent AI servers to major hyperscalers. They actually signed a 15-year deal worth over $7 billion with Applied Digital to essentially utilize their platform in North Dakota. And they're essentially, Applied Digital is a high performance cloud computing platform. It's an AI-based hyperscale software company that essentially hosts things like crypto mining, but also large learning processing models, as well as graphics rendering and machine learning. And so I think this deal makes sense for these two combined companies, essentially tying in the Applied Digital software ecosystem and cloud ecosystem alongside CoreWeave's, platform as a service, or if you will, artificial intelligence as a service. And the reason I say it's actually a big deal for Applied Digital is that you just have to look at the overall numbers that we're talking about here. Now, 15 years is a long period of time, and $7 billion is a lot of money, but it is quite meaningful considering that Applied Digital sales just last year were about $220 million. So, if you just annualize these figures, this deal itself is worth, uncompounded, about $500 million a year for Applied Digital. So I think that speaks to why the stock was higher today by close to 50%, because it essentially increases their top line sales dramatically in the near term. Now, they're probably not going to receive all that money equally over the next 15 years. It's probably going to be, small amounts up front and, of course, accelerated near the end of the deal. But nonetheless, for a small cap company like this, you just have to, again, look at the numbers. $1.5 billion in market cap. I mean, just the deal itself alone, is worth about 4.5 to 5 times their market cap. So that's why the stock was significantly higher today on the back of a deal which is significantly accretive to the top line of the business, irrespective of the fact that they're still losing around $220 million a year on a trailing basis. But this essentially gets the company closer towards potential scalable profits, irrespective of the fact that they're still not expected to achieve profitability this year or next.
Well, it looks like they have that at least potential in their future. Thank you, George, for flagging that one for us.